Crypto Kingdom? Welcome to the Crypto Kingdom. Welcome, guys. This is London. I want to bring you some information today. Everyone is consistently asking us questions like, how do you buy into crypto? Some people want to know the exchange that you should buy on. Some people want to know maybe which specific crypto they should buy into. What we're going to focus on today, and we bring you technical analysis, guys. We're very accurate and we bring you timely information. We would ask that you hit that like button, the thumbs up, if you would like to receive accurate and timely information, okay? We're going to go over what is called a Fibonacci. It is a retracement sequence which is inherent within any price action. Okay, this is going to be crucial in terms of your ability, okay, your ability to enter into a market. For instance, I spoke with someone this last week and they said, well, I bought into Bitcoin. I don't know how many they bought, guys. It was maybe a potentially big investment. I said, well, how did it go? They said, well, I paid too much. I got too high of a price. Oh, that we don't ever want to hear that, guys. You'll feel stuck. So this is the primer on how not to get stuck. This has to deal with pricing targets. This has to deal with how do you achieve a positive price, okay? Or let's say achieve a good cost basis, okay? If we're going to get technical with it. My background, this is not going to be financial advice, okay? I have a finance background, okay? I've been a financial analyst on some very large deals, billion-dollar deals with kind of billion-dollar companies. So that was my history out of Duke University. So I've worked across the table with Harvard Foundation in terms of placing their funds in our equity fund, etc. I've got the kind of the skills and know-how to be able to just apply this and to bring this information to you. So it's crucial that we understand, okay, as we're looking at the overall picture here. Let's take, for instance, Dogecoin. Dogecoin has been very popular. Now, I'm just using this as an example. This is a kind of just a reasonable approach. What we use is what is essentially. It's the best of the strategy that we've been able to find in terms of the investment levels from all of the top guys. I'm talking about competitors to BlackRock. What you'll hear them say is, we are prepared, and quote unquote, they'll say, we are prepared to double down, okay, to double down at different levels. All right, so we want to use that approach in terms of doubling down, or we'll say even tripling down at different levels. And guys, this is a Fibonacci. We say, what is a Fibonacci? Well, you guys all understand what a price chart is. Okay, that's a standardized price chart. A Fibonacci is something that we can draw in. All it is, guys, it provides kind of a colored guide. Okay, just a different multi-tiered colored guide that we can actually say, well, from the price action from the low to the high, it has retraced from the high. From the peak, it has retraced. This first figure, it's a default, guys. It's used by the exchange programs. So this default is a 23.6% retracement. Okay, that means it has fallen off 23% in the price action since the beginning here, since the initiation of the trend, 23.6. And it actually calculates the exact figure for us here, the 35 cents from essentially the 45. On this specific example, Dogecoin went up to about, let's say, 43, 45 cents. That specific retracement would be right about 35 cents, okay? So that's kind of what we're looking at in terms of the first part of the retracement. Again, we're trying to see, and I want to look at this on kind of, because everyone can understand, well, of course you'd like to get in, let's say, a Bitcoin at 500 or let's say even 5,009. You'd like to get in Dogecoin if it's 45 cents at 9 cents. You'd like to pay a fraction of the amount. Like, what we try and do is just continually remind you that you're in a market, that you're part of the demand curve, that at an extremely expensive, okay, at an extremely expensive price, you're likely not going to have any, I just put a zero up here, you're not going to have any, okay, demand for something that's extremely expensive. That's just the way a demand curves work. As it becomes a little bit more reasonable, well, you're kind of ready to pepper in a little bit in terms of your availability of your investment. Okay, that's just kind of standard. That's just in line with the demand curve, guys. It's not me giving you advice, anything else. I'd just like you to understand what an ordinary market participant would do. Okay, I do have an economics degree from Duke University, so it's an ordinary, let's say, ordinary market behavior. Okay, is that as the price goes down, you're going to have more money available. Your demand is increasing, okay? And that double down, triple down approach is literally something you'll hear from some of the top. They are the top strategists. So they will talk about doubling and tripling down at different levels or layers, etc. So I didn't want to mention any names. I almost did. That's not good. So as we look at, like, say, $100 in this top green area, that just says, okay, it's retraced between 23 and 38%. That's the next layer down. So it's retraced in and around that level. So we have, okay, it's become somewhat reasonable. Let's put $100 in. The next level, let's go ahead and double down, all right? As we get into doubling and tripling down through these additional layers, okay, what we're doing is we're creating a circumstance where the majority of the cash is in reserve or is held on to, and essentially you're not going to wind up feeling stuck. That's the idea, and it's in line with the demand curve. You guys understand that. Now, you can apply that. You can do your own figures. Essentially, the calculations that I've brought here are in line with the following, and I want to bring up the mathematics. For those of you who need a primer on this, I want to bring up the mathematics, okay? At the different levels, okay? At the different levels, you have essentially here on top, and this is going to need to be drawn out. I may actually draw this out so that we have a real good kind of just a primer here. I want to go through a primer for those of you who want to watch this in the future, etc. I want to make sure that you can enjoy this. So let's do this. Let's draw these over here, and let's. There's going to be a lot of arrows everywhere. Let me pull this back over here. We can do this from this side. So I want you guys to understand, like the 1x is just going to be into this area right here. Okay, that's going to be the 1x. Okay. And that's what we're going to start with. That's kind of the baseline investment, okay? That's the baseline investment of what we're looking at. So that 1x is going to turn into a 2x, okay? We're just going to clone that right here, and we're going to throw that into this area right in here. That's going to be 2x your investment. It's just, again, aligning you with the principle that at lower prices, you're going to have more demand, okay? So that 2x is in that area. This is the strategy, okay? The strategy of making sure that you're a good market participant. Otherwise, the market maker, the guy in charge of all the buying and the selling action, he's not going to treat you too kindly. You'll overpay for things. You don't want to buy high and sell low. You want to buy low and sell high. That 6x is in around this area. You can say at this specific level if you'd like to, and we can go ahead and get real specific at this, okay? That level right there is immediately once you get into the green, you've got some action, okay? Let's say immediately once you get into this this darker green, you have some action in around 2x. This is 6x, okay? Let's go to the, clone this. Now I'm gonna show you how this is all worked out in this most recent trading kind of pattern that's developed on Doge, which we discussed last night. And people will come to me and they'll say, should I invest? Should I invest around this area? Guys, I have to tell you, if you're just gonna throw all of your money in and bet, you might as well, honestly, I don't know if you want to go to Vegas, but it's not really much of a strategy. And I don't like that because I know a lot of people want to trade, they enjoy trading. And I want that to be something that you guys can really enjoy for a long time. And it seems like the strategy that the big guys use that we're able to communicate, to the extent we are able to communicate, and I don't speak for the big guys at all. It's just the rationale of abiding by economic principles is something that I can speak to. So I think their strategy speaks towards that, and I'm happy to speak towards rational economic theory and strategy. I did gain a degree in that. So as we look at the different levels. Yeah, these are, and just pay attention, this is 1x, okay? This is, let's say, $100 in this top level, okay? And we can essentially define that as kind of this top level. This the next level down is going to be, what is that going to be? That's going to be 200, okay, or 2x, all right? So we have 2x in that level. Excuse me. The next level, okay, we're going to say 6x. Why? Because it's 6 times the original 100 that you were able or willing to gain some exposure to. I always say it's a good idea. Essentially, it's not super expensive, right? And it's been defined kind of by the trading. This is TradingView. This is a premium kind of advanced version package of TradingView. This is the same software that comes available in all your exchanges, guys. And all the exchanges, this is what becomes available. That it's you're given their interface with this technology, okay, with this software. So we just try and use it and put it to good logical use. It's early, by the way. It's about 8 o'clock in the morning. I woke up early and people are just saying, should I invest? Should I invest? I'm like, I'm not going to give you advice. Let me walk through kind of an accumulation strategy. What we do is we call this, I may write this down, but this is the heavyweight double or triple down approach. What you're doing, if you look at these numbers, 1x, 100, 2x, 200, okay? 6x means what? 600. 18x, okay, that means what? 1800. Now, 54x means what? 5,400. Now, guys, it may be, okay, it may be, let's add this up. First of all, 81x, that's, if you add all these together, how many incremental units are there of your investment? 81x. All right, well, what you're saying there essentially is, and this is the example I was going to get to before I retrace to that. Now, the example is, so 1x, you're saying 1 out of 81. I mean, that's barely, guys. That's a little over, I guess, 1%. All right, so a little over 1%. What kind of exposure is that? Do you expect me to trade with just over 1%? Yeah, at a really high level, I mean, if you look at that, if you have $1 million account, right? You had $1 million account and you're looking at like 1% of $1 million is probably what, like 10 grand? So it's something. Now, if it's a lower amount, it'd be a lower figure. If you're trading 100, the idea is, yeah, if you're trading $100, you're only going to put in $1 up there. You could put the amount in. It will gain you some trajectory to the upside. Now, this can, with the caveat, this can on a perfect pattern, you may want to adjust this. You may not. For instance, in the breakout of kind of what is defined as a bull flag, okay? The breakout of this bull flag, I wouldn't really change things around too much, okay? You're still in this level here of 600, okay? That's comfortable, guys. That's a comfortable entry. If that's 6,000, that's still kind of comfortable, guys. That's still nice. As you start to play in the higher, kind of featured levels up in here, things, especially with Dogecoin, it may get more chaotic. I'll just say that. It retraced 50%. If we look at this, and guys, this happens with Bitcoin, it happens with all types of coins, all types of investments. You have crashes, you have retracements, corrections, etc. This is a 50% retracement. Yeah, so this strategy is one, this double and triple down approach, and kind of a minimization of your exposure. Providing you some practical type of insurance, etc., on your own investment, making sure you always have that percentage of money, a great percentage on the lower levels, on the kind of in the reserve levels. Let's say that. Okay, so this is how the calculations are done. You essentially have these, and I always say you can make your own calculations. You can do your own math, right? Well, this is me doing the math, okay? This is me saying 1x on top. Okay, great, we have that. 2x right here. Great, we have that. 6x, great, here. You may have, guys, you may go to 4 on this. And I'm serious, if you are trading with $1 million, you may decide this is 1, this is 4, this is, you may want to triple down, or you may want to quadruple down. Okay, you may want to do that. You work out the math. You figure out your own tolerances. I'm not going to give you the advice as to, this is what must be done. This is what exactly is being done. If you're not doing it, it's incorrect. No, I'm encouraging you to do your own math, okay? But I'm bringing up an example today so that you guys can understand exactly how this is calculated in on the aggregate, on the whole, what's your exposure level in and around these top levels. Now, what I like about this is if this, let's say this is a $50,000 coin, or this is something else like that. Yeah, you're not going to just leverage in your entire amount if you have $1 million into a $50,000 coin, or into Dogecoin, or at 40 cents. Guys, that's the high. You don't buy high. Okay, you just don't do that in the market. When you do that, you wind up telling someone, well, I bought too high. I bought too highly, it just wasn't working out. Hopefully it'll go back up. That's lost. That's just lost money, guys. That's unnecessary. So always limit your exposure. The idea projected by the strategy is it protects your cash until you get into a different area that you're allowed to capitalize on that or take advantage of those lower costs. So that's kind of the programming that goes through. Again, that's just market theory. That's just economics, guys. It's just your basic bare bones first class of economics. Literally, I mean, when we're all 18, 19 years old, we learn this. So we kind of forget it along the way. We want to be a part of that market action, and a lot of times that doesn't agree with us too well, or the market too well. So you guys have understood that, and I get a lot of comments on that. People, I got involved too much. Well, is that all your money? We don't want that to be all your money. Reserve that cash. Have it available on the lower levels. We're going to see how that strategy plays out here, okay? And I'm going to go through this so you understand exactly, like on this previous price pattern here with Dogecoin. Now, I was talking about, is it going to break out? Is it going to break down? I don't know. I mean, it's just, we got a tweet from Elon last night late. That's fine. It affected the price. After that, we got a good run up in price. So the purpose here is it did retrace within this smaller pattern, okay? So in retracing within this smaller pattern, just pay attention to this if you can, okay? I'm going to move these out on the aggregate as I just went through, guys. I just went through on the aggregate, okay? These different tiered levels, okay? You guys saw that? We have the red, kind of the light green, we have the dark green, then we have the teal, then we have the blue. Then we have kind of entry into the gray area, right? This is the gray area. I like it. It's that for a reason. The red area, I like it. It's that way for a reason, guys. That's the red zone. We don't hit that. As soon as it gets into the green, you get some action that becomes reasonable in terms of an economics approach or a business approach. So yeah, it's a little bit more reasonable in terms of price. I think we'll have some action available there. Again, this is just a common strategy that's used by some of the big guys. So you guys can research them, see, and tell me what you think. Tell me what you find from their kind of work. So let's look at this, guys. That's the aggregate, okay? It's literally that that 1x, then that, what do we have here? The 1x, 2x, 6x, 18x. I may bring that up within here, guys. Let's go ahead and do that real quickly. I just want to do that so you understand what we're applying now within the micro, okay? We're going to do that same 1x, okay? We're going to do that same 2x. We're going to do that same, on this example, x. We're going to do the 18x. We're going to do the 54x. Guys, this is complicated. You're talking about trading, all right? You're talking about what is going to turn you into someone who's potentially able to capitalize on alpha, all right, or to generate alpha. Now, what is alpha? Alpha is the percentage by which you beat the market. How are you going to beat the market? It may take you actually getting a calculator and having some strategy. That's all I'll say, guys. So this is an idea to keep you more heavily involved at the lower levels, okay? With your 81, if you have 81 times whatever your original investment is, that's going to be, the 54 is going to be down in this level, okay? We like that, guys. That's very nice. Now let's take a and that's the same. Let's say people will get confused. Is that the same amount, 100 in here? No, that's not 100 at this top level. Then 200 at the top level, because then you would spend the entire amount, okay, the entire amount of your holdings in and around this level. I mean, it just as easily, guys. Last night it just as easily could have broken down, and if you had spent the entire amount in this level, you literally would have been trapped. You would be overexposed, you'd be trapped, and you'd be having a discussion with someone that, you know, you're over leveraged and you can't believe, you're going to be stressed out, you're going to be unhappy. This way, watch what this does, guys. If you limit it in here to just this amount, okay, you limit it just to this amount. Let's go to the 600. We can recalculate. I calculated this, I believe, for the 600. Let's and we'll go ahead and recalculate it for the 1800. Okay, so let's go ahead and do that. But it just as easily could have gone down. And I set this up in a discussion with someone else to give a different example. And I like that because these examples are fluid, guys. They're just fluid examples. That's what they are. They're fluid strategies. That would be about the case if we did 600 in this area, okay? Someone may be even more, you understand, some people may be more conservative than this approach precisely. So those of you who are watching and paying attention, I appreciate it. This is complicated stuff, and it's highly technical, guys. This is kind of trading, what I like to call it, we have alpha traders, okay? And those alpha traders, guys, we have kind of sessions that we go through, and it's in line with this level of work, but to give you the nuances and the strategy at a detailed level in terms of what you can expect or what should you be applying to this kind of micro level based upon a macro theory of your overall existence in the market, guys. On Twitter, guys, you can go ahead and just a quick shout out to everybody on Twitter. We appreciate you very much. The Twitter teams. Type in The Kingdom. That's us. I'm London with the Crypto Kingdom. Type in The Kingdom, and then you'll scroll down to the very bottom. Let's see, this will pop up here. Go to the Kingdom, okay? Click on Go to the Kingdom out of the search box. It won't be any one of these featured. Click on Go to the Kingdom. You'll be able to bring up a profile. Not that one. What is this? See, this is what happens. The Kingdom. There's just a lot of different kingdoms, like the Kingdom Fam, etc. That's the Kingdom. That's no D, okay? Spell that, The Kingdom, TheKingdom. That's how we spell it. But yeah, there's some knockoffs, this and that. We're not that, guys. We are this with the golden bull. So the bull for the market, okay? So Kingdom, it's very sought after. So we're happy to have that specific tag. You can find us there. You can also manage your way into our Discord, okay? Find the Discord server. Click on that, guys. It's a great chat room, and it's just something that we really appreciate having the access to. It allows us all to communicate, okay? You'll see that copy of the golden bull there, just for the market, just the bull for the market. So just go ahead and feel free to join there as we go through the technical aspects there. We do have in the Discord, we have alpha traders, okay? We have a specific room, we have sessions for kind of training. It can be something that you can self-train for. It can take years. I started doing this stuff in high school. So I was offered a position at Morgan Stanley. I officially refused that position. I didn't want to hit and crank the phones and sell things to people at a high price when, essentially, guys, they have the license to sell you things at a high price when they know you may not make money on it. That's I don't want people to call me later and say, hey, you told me to buy into this stock and it didn't work out. So there's some nuances to that, but I love a lot of those guys over there. I have a lot of friends. So what I want to talk about, let's get into this right now. So what we want to do is we essentially want to apply, we had some positive price action. Let's get into a polyline. We had this price action, and around here we were dipping down into these other levels, right? So we were dipping down into these layers, all right? Then we had this positive price action on the upside, right? People capitalized on this trade, okay? Hugely, they capitalized on this trade after getting a great price, guys, at around 16 cents. So 16, you about doubled your entry if you just decided to hold. Some people were out, they wanted to reaccumulate. I think it worked well also for the people who were going to reaccumulate. Very well. I can't gauge your tolerance, guys, on what you're going to do in terms of when you want to exit. People will ask me, where should we exit? Should I get out now? Should I? And I'm like, guys, that's not I'm not going to decide whether or not your tolerance level is in line with what's really reasonable. I'm going to tell you a rational approach based on business and economic theory that I've studied in line with my degree and my business background. That's been extensive. Okay, in terms of that, I'm going to go with the double down or triple down approach. Okay, that's just what I'm going to go with. Okay, this tier 1, the target level 1, the target level 2. Okay, target level 3, 4, and 5, the 1x, 2x, 6x, 18x, and 54x. You may have your own levels, but guys, this keeps your money on the towards the downside of this, even this interim, this smaller channel. When it hits this first level, that's 1x. When it hits on this retracement in a line here to the next level, okay, that's 2x. When it hits the next level, and watch what this does, guys. This is that 6x right here, tier 3. All I'm doing is marching down, tier 1, tier 2, tier 3. Okay, as we hit tier 4, what do we have? We have 18x. Okay, as we hit tier 5, okay, tier 5 gets us into what? Gets us into 54x. Okay, so how do we compute this? First of all, what does it do? That puts the majority of your cash into this. If you cashed out here, it puts the majority of your cash, it recapitalizes it, and guys, you essentially are going to benefit of a reduction, okay, up to a 20% reduction here if you don't. And again, guys, this could have gone up, it could have gone down. Things go up and things go down. All right, if you're going to be in a very, very bullish mood, we may be able to capitalize on that kind of a theory once we reestablish that as a trend. This was a bounce off of a pre-designated level. There was no confirmation, definite confirmation in terms of a pattern or otherwise, that it was definitely going to go up. In fact, it took, I think, a tweet from Elon. Was that predictable within that time frame? Guys, if you want to predict when people are going to get onto a Twitter and unleash the hounds on this, you can do that. It's just it's not technically sound. I wouldn't say that. It doesn't have to deal specifically just with the price action. Now, it will still behave in line with that. The good news is you still have some exposure within that you have some exposure within that paradigm, okay, and you've been able to reaccumulate after you said, okay, great, I'm going to take all these chips home for a minute. I'm going to take all these profits home for a minute. I'm happy. Now it's time to reaccumulate, right? And play up the next round with the understanding that you could break through this. Guys, you could break through this at any point in time. Anything could happen. Bitcoin could fall through the floor. That's exactly what just happened. And as much as you guys want to get bullish because it's up right now, guys, you are the outlier right now in Dogecoin. So as much as we know, the price just went down through the floor with Bitcoin. Guys, this was a traumatic experience right here. You're one step away, potentially, from another traumatic experience if Bitcoin were to decide. And this is not fear-mongering at all. It's just the truth, because we just went through this. How quickly we forget. How quickly we forget what just happened. Now on this, we were prepared. We literally hit exactly at our levels. We hit at this 18x and at this 54x. Okay, this is the level 4 and the level 5. So it's not like we're not prepared at all. In fact, we called out this specific price target. As things were falling, we literally called it out and people were able to enter into these prices. Okay, so that's the amazing thing. That's the beautiful thing about the strategy and these Fibonacci's, is that they provide us with these pre-designated levels. We're not doing the mathematics. We could, in the past we have. But that's something that's pre-designated and very easy, guys. Very easy for us to calculate. It's literally just us pulling up the features of the chart, okay, with these pre-designated levels to the right. So this is the approach that we use, the level 1, level 2, level 3, 4, and 5, okay? This 1x, 2x, 6x, 18x, and 54x. What does that do? That keeps essentially the money towards the bottom. We've already capitalized in at a great re-entry price per the strategy. Okay, so that's to your credit. For those of you who want to trade and you feel like you want to capitalize on each and every moment, you may be trying to essentially go through what's called an alpha. You're trying to achieve alpha. Alpha is the percentage by which you beat the market. Okay, so you just continue to do kind of what you're doing in terms of your own approaches. Just don't come to me and say, should I get in here? Because guys, it's very complicated. That's what this video is about. It's very, very complicated. Okay, at least it's detailed. Let me say that. At least it's detailed. Excuse me. What we're talking about here are the different levels applying within the micro, within this price action here, after the entry here. which again, we were all in this. This is all exactly. It was precisely in line with what we had immediately delivered out in the Discord and on Twitter, etc. So we're now talking about after we achieve this price action. It looks like it's kind of falling over. Okay, great. We want to maximize and capitalize on those returns. We want to increase or maximize our gains, right? So we want to we want to reaccumulate during or in around these levels, and we want to plan. Let's essentially plan for the contingency that we're able to guard some cash back. We're able to enter at these different levels, tier 1, 2, 3, 4, and 5. Okay, that will lower your cost basis for those of you who were exiting in and around this time. You may have had another trade. That's one big thing here, guys. You may have had another trade to get to that instead of 20%, this has gone up 20%. Please listen to this. You may have had another trade, for instance, on Fetch or on Harmony One or on something else wherein you were able to use this cash literally somewhere else and make a 50%. You had a stronger trade somewhere else. Someone will say, well, why don't you just hold on? Well, you can take this cash and essentially you may have had a real opportunity. We talked about some issues like that over the last 24 hours, some really great trades that went on elsewhere. And right after this, bam, another trade, just bam. So you're constantly achieving that overall market strategy that you want and those gains that you're looking for. So that's one of the reasons why you would have said, yes, I'm going to trade this, I'm going to exit, and then I have an accumulation schedule, but right now I need this cash somewhere else. That's a pretty aggressive, kind of sophisticated approach, guys. If you have your trades lined up like that, congratulations. We'd like to have you in our community and potentially into the alpha traders. You guys can DM me. There is a place on that Discord where you can ask me questions directly. So let's get into this. Let's do the calculations. I don't want to do them right now. You guys aren't going to want to listen to them, but I'm going to go ahead and do them for purposes of the primer. This is going to be the primer on entry. And again, understand, well, people don't want to sell. Well, if you can make, what was this? The gain here was phenomenal. You made 80% on this. If you had another 80% set up, I'm going to say that, and some guys, people did, okay? If you had another 80% set up in that next 21 hours, I'm talking time down to a hilt, bam, or the next 5-6 hours, they happened, they existed. We talked about them, exactly which ones they were, ones that we were on, etc. Use that as a type of example, okay? But yeah, you can hit 80% and the next day hit 80%. You can come back here and slowly start to reaccumulate and still have a reserve amount of capital in the tanks in case, just as a reserve, as a kind of insurance at lower levels. So that's the kind of strategy that doesn't get washed out. This is a key level of the 61.8 to the 65 would be the golden pocket in here. So that typically hits very well, guys. That's something that's very predictable. Okay, so this is hit on a lot of different ones, and sometimes we go hunting for golden pockets. All right, and that's just the exact zone to which the overall will retrace. This is a very standard ratio. It's called the golden ratio. Okay. Within the dynamics of an overall price, I'd say a price wave. We're starting to get into some wave theory here, okay? So nothing too advanced. Don't want to get too out there in terms of kind of wave theory or anything else like that. It's just as things curl over, they like to kind of retrace in around to 61%. It's a key ratio. Just know that. So it's very common. So if we go hunting for golden pockets, we're hunting for this level of retracement on different coins or on different stocks or whatever it may be, commodities, etc. We want that trajectory always. Every day we want to be achieving this. Okay? So that's nice. This has gone up 20%, all right? So you have the opportunity to maybe go make some money somewhere else, maybe another 50% or 60% somewhere else during this. Then you had set up in the meantime, you've set up, while you're making money, maybe you have set up your limit orders, okay, on the purchase side, right? You want to buy in at different levels. That limit order is just the limit, okay, that you're willing to pay for a certain quantity, okay? That's called a limit order. Some exchanges have them, some don't. I recommend being on an exchange that does. Otherwise, guys, it's just too complicated. It requires too much of your time. Let's do the math, okay? Now, this is going to be the part that's not necessarily fun. I want to go ahead and do it, okay? Now, what we're going to do is we're going to have to come up with some ratios. We're going to have to say that this first level, okay, this all adds up. We've already done the math over here. Let's bring this over, guys. Let's bring this over. This is what we know, all right? We're going to have to do this math, and I'm going to make this a little bit simple, guys. The only complication here is, and understand this for purposes of the brevity of this specific, and it gets a little bit more complicated. You can uncomplicate it. We can uncomplicate it together, okay, in kind of maybe a private session or something. This $600, this range is going to flow over through into here, okay? I'm going to say you might have wanted to leave some of this in. I'm going to say maybe you wanted to leave some exposure in along the way to kind of cover this after this great price action. You wanted to leave a little bit of exposure in, all right, so that maybe if it continued to go up on the off chance, now maybe not the full 600. You just invested down at this level about 5,400, okay? You might have left some in just to be like, okay, that'll kind of cover things. I'm going to leave that within the example. I'm going to push it aside from the different levels. And right now, just for purposes of simplicity, because the math is already complicated enough, I'm about going to just bring this 1,800. Let me see this right here. I'm going to bring that 1,800 as available within this dynamic. Now, I can add, guys, if you want me to, it's very easy. I can add this 600 into the 1,800. Do you see that? Because it is in this level. If you guys want me to do that right now, I can do it. It's more complicated, but I want you to know we're within this overall green, kind of this darker green area. Okay, the 100 is up above. The 200 is up above, right? So I can bring this 600 in to the dynamics and along with the 1,800. Okay, depending upon how you look at it, it could be more aggressive or it could be more conservative. Okay, I'm not getting into the specifics, and don't, again, this guy's financial advice. It's just a strategy. I want you to understand that you're supposed to be more involved at a lower level with heavier amounts of cash. That's in line with the demand curve. Okay, if you don't operate in line with the demand curve at extremely high prices, you're not going to have any demand. Okay, as it gets more reasonable, you have a little bit, still not much. At great prices, you're going to have a huge demand, right? That's the demand curve. So that's just, again, economics 101, business 101. If you guys would like to take whatever we have in these levels, let's go ahead and take the 600 and the 1,800, okay? Let's go ahead and take that if we want to, the 1,600 and the 1,800. So we just wouldn't do it, but we can do it. I just want you to understand that's going to apply over here, this red arrow here, huh? That's going to apply to this top level. So you get into kind of a differentiated application. It gets confusing, guys, when you're really doing this with a higher amount of money than 600 and 1,800. You get into some different mathematics, okay? So I don't want to skew those mathematics through the simplicity of this approach. That's the disclaimer. I'm going to go ahead and do this for purposes of simplicity so that you kind of understand, but we don't necessarily just want to, re-inject on a high level with different high-end investments. I'm just going to say this could get more complicated. Seek the advice of an investment advisor and see if he can delegate that to you if he's interested in the price you're going to get. So for right now, let's go ahead and do this for purposes of simplicity. We're in this overall green level, and then we're into the teal, okay, the darker green and the teal. So let's go ahead and add this up, 1,800 and 600. Guys, you're going to have to look at a calculator, okay? Believe it or not, you're involved in the market, and you're going to have to deal with a calculator, okay? So 1,800 plus 600 is 2,400. Okay, so what we have here is $2,400. Guys, that's something. That's on the assumption that you've got additional kind of a double down. Now you understand, okay, a double down below. And again, your ratios may be different. All of a sudden, this looks a little bit more reasonable, right? Yeah, 1,800 and 600, you've got 2,400. Okay, see, now you're dealing with a reasonable amount, at least on the example, okay? This is just an example, guys. This is something I would get in a textbook, or I would expect to get out of a textbook, and I've been through plenty of them. So have you guys. I know a lot of you have a great education. It's great to have here. So let's look at this. Let's just make this a little bit bigger. That is going to be the sum total of the amount that literally is going to be divided upon these tiers, okay? So that's not a minimal amount of money. That's not trivial, particularly if the top level is at 1,000. Guys, if this is at 1,000, okay, and this is at 2,000, this is at 6,000, this is at 18,000. Well, all of a sudden, this is at 24,000. All right, so we're talking about something that makes some legitimate kind of sense here. Now, in terms of your overall exposure, guys, you're going to dictate that. How about this? You guys advise me. Okay, I'm looking forward to getting your advice. You guys give me advice. You do that. But these are real dollars. So when you talk about, well, this is just boring, you're going to do a 1x on, expect me to do a 1x on, or 1%, right? A 1% of $2,400. That's nothing. Okay, let's let the strategy speak for itself. That's what I'm going to say. Let the strategy speak for itself. I'm going to communicate that strategy to you, and you guys judge the strategy based upon how you would have reaccumulated here and how you would have essentially regained this percentage and kind of an increase on the differential between this and this point, which is a drop of value, a drop in value of 20%. 20% on 2,400. I'm going to just use that as a ballpark right now, not even get into the 5,400, guys. And we can bring that in. All these mathematics, I'm going to qualify them because I don't want to get too involved. I understand, believe me, I understand the math, guys. I know you do too. But if we just use it on this 2,400, guys, you're looking at 20% of 2,400. What's that? Well, if you don't care about that, let's just ask. Times 0.2. That's $480. That's $500. Now, if it's 1,000 up top, 2,000, 6,000, and 18,000, that's $5,000 that you don't care about. All right. If it's at $50,000, you'd care about it, or $500,000, you'd care about it. Because if you don't care about 5,000 or 500, you may not care about the $500,000. If you're doing that and you're having fun, don't worry about it. You know, shine up those shoes and get on out there and have fun. Get on the dance floor and just party, rock it out. We know people who do that. That's part of the style. If you like trading, okay, and some of you want to have a career in trading, these are the type of dynamics that you can put yourself through to understand what's going on. What are the essentials of kind of a trading philosophy and strategy? This is probably the most complicated video that we've made. But I want the alpha traders. I want you guys to know. And alpha traders are one guys. They're few and they're dedicated. You other guys who are trying to achieve alpha, there's a lot behind this stuff that we get this complicated. I want you to know there's a lot of technique behind this. There's a lot of strategy behind this that again I started back in just kind of self-training and around high school in this stuff. So then studied some advanced advanced linear calculus at the graduate level while I was an undergrad at Duke. You know, I kind of placed up into some advanced engineering calculus, some different things. I've always been involved really heavily in mathematics. Always loved technical analysis since high school. Just been my passion. So as we get in this is a complicated math problem, right? We got the 600, the 1800. It's pretty easy. No, it's the 1x, 2x, 6x, 18x, 54x. Rewatch this video. I'll tell you that. Rewatch this video. You guys will learn. All right, so we're going to take that 2,400 over. Now, how do we calculate these different levels? You're like, okay, London, I get it. We drew this fib on this smaller interval here, right? And what do we draw it on? You guys know we always draw on the line, right? Yeah, we go on that line, okay? That fib right here is from the top through into the peak. We pull this over here just to give us some extra space to look at, all right? And what's that going to give us? That's going to give us our pricing targets. Exactly, right? We got our pricing targets. Beautiful, right? On this right-hand side here, you're going to get your pricing targets. Let's zoom all the way in so you guys can get this, all right? Those are the pricing targets. 2, 3, 6, retracement. Bam, you're in at that 1x level. Okay, we get that next, and it's difficult. It becomes kind of difficult to see. Let's scoot this over. A little clarity. Very nice. Very nice. Look at what all the levels were hit, guys. That's because people are following the strategy. There are orders there. You understand that? There are orders that the market maker's coming down to pick up. What orders? Well, these orders. Target level 1, target level 2, target level 3, level 4, and level 5. This 1x, 2x, 6x, 18x, and 54x. Now do you see why it's important to have your cash leveraged more to the downside? Absolutely. And this here, you're not going to see that unless we go to the candlesticks, and then it becomes perfect, guys. Doesn't look like it hit on the line chart. It was up above on the line chart, right? Yeah, look at this. You are at that lower level. You are literally, you're executing on that 22,427. All right. Please be careful how you draw your Fibonacci's. Know what time frame you're on. That's going to be dependent upon whether or not you're being aggressive, whether or not you're being kind of complacent, kind of what strategy you're going with. It's extremely important, guys. It dictates your Fibonacci's. Your Fibonacci's will have to be redrawn and calculated. That's one of the benefits of being with the Discord. Okay, I'm able to get you this information. This video, I can clearly you have these levels now, but we're learning how to apply up along this level now. All right, that's fine. That's fine. Now, I'm going to say you always have to be prepared, guys. You always have to be prepared for the contingent that the entirety of this would drop back down into the previous channel. So how do we do that? Well, we're prepared, and I'm going to bring this up. We're prepared like this, right? Because we still have below this, we have the reserve amounts of cash at the lower levels. So we kick back into this strategy. If the price goes down through the floor, we still have this, this big amount, 5,400. We still have the different levels that we're going to hit. Okay, so we prepare for that contingency. Okay, in line with this higher level. Okay, but we still accumulate there. People wanted to know last night, well, should I get in? Should I get in now? Like, I mean, get in now. Look at all this price action you had to get in with, right? Yeah, that's when you get in. That's what we've been talking about for weeks and weeks. So that's the idea that we have here, is to not necessarily have to accumulate at this level. No, you want to increase the efficiency of price. Okay, your pricing efficiency. You want to accumulate at these lower levels. That's what achieves you a good price. That's what gets you a great, and that's what maximizes your profit, is having heavier amounts of cash at the lower levels. Okay, so it is a little complicated. Again, it requires a little bit of mathematics, right? Just a little bit. You got a trading account, right? You want to know how you should trade, right? Well, it's going to require a little bit of mathematics. It's going to require a calculator. Believe it or not, we got to pull out this calculator. Okay, I've never pulled out the calculator on you guys, so I'm going to do that today, just so you do understand where we're at. So how are we going to compute this? All right, we're going to compute this very easily, right? I'm going to put this kind of like this, all right? The 26.7, okay, the 25.5, the 26 or 24.6, the 23.7, the 22.4. These examples, guys, on Bitcoin will be 57,000, 55,000, 53,000, 51,000. Okay, it applies directly like that. I can do a complete different video on that if need be for Bitcoin or any other pricing action that we're looking at. The strategy is the same: the retracement, the entry, and the heavier amounts of cash at the lower levels. Okay, that's exactly what we're looking for there. Okay, is that same? It's the same dynamic. The price goes up, retraces. Price goes up, retraces. We constantly want to achieve that alpha. We want to re-engage capital per the strategy. We want to re-engage capital and achieve a lower cost basis. That's just the cost per share, cost per coin, cost basis. Okay, the unit price cost. We want to achieve, and we essentially want to eliminate this drop in the price of our holdings of the 20% or whatever it will typically go down. All right, this is the key level, the 61.8, this golden pocket. Again, that's a Fibonacci level. It's pre-designated. It's called the golden ratio. I didn't invent it. It's just the truth. That's what a lot of the market players, market makers, everybody, what they're involved in terms of creating kind of a solid price structure and solid price. Something that's tradable, guys. You have to understand, at the end of the day, he's creating buyers and sellers. How does he do that? Well, he's given us software to do that with. He's facilitating our becoming buyers and sellers. If you want to just become a buyer at a high level and potentially not have anyone to sell to, that where you can make money, you can do that. Or you can use a strategy that they give us in terms of the technology. It's kind of easy. So let's go ahead and do this math. I've been putting it off for a minute, but let's do the math and let's look at this in terms of what would this look like. All right. So we have to do, and I'm going to get through this, I promise. This is live on the scene. It's like doing a calculus problem live in front of people. I'm not really prepared for this. It's before 9 o'clock, guys. I'm not even kidding right now, but let's go ahead and do this. All right. Now, what we know is that I'm going to write this equation down. This is the most amount of math that I'm going to give the group aggregate class here. We know that 81x, this is our equation for the day, and the only one that I will give you. 81x equals 2,000, okay? $2,400. Is that what we know? That is what we know. 81 of these little units that were added up, and guys, all we did was double down. We tripled down, we tripled down, we tripled down, okay? I know that number, just work with me on this, okay? I know that number, the total number, if I add all of these up, the number of times that we doubled or tripled down a unit, okay, to maximize our exposure, watch the full tape, guys, but pay attention to this. It equals 81. Yours may equal a different amount. You may go triple and triple or quadruple and quadruple. Do your own calculations. When I say do your own calculations, this is what I'm referring to. This is an example. This is a strategy example so that you can understand maximizing your leverage down towards the bottom side. Still planning, okay? For the possibility that you don't really have to dig down or the market maker doesn't pick you up down here, you still want some exposure, and you're operating in line with the dynamics of economics and business theory. That at the demand curve at the extremely high levels, there's nothing, guys. There's no demand. If you break that, okay, if you break that over a period of time, you're going to get washed out. Okay, you're not operating by market principles. Over time, you're going to get washed out. If you demand, if your demand is in line with a better price, you're going to get a better price over time. All right, so that's going to maximize your gains. Let's look at how this example would have worked out here. Instead of having your $2,400 just stuck in this level and a cost basis, we can get into the cost basis calculations. I'm not going there, guys. All I want to give you is the ideas of what could be the investments, so you can lay this out yourself. We'll do the cost basis on a complete. I may outsource that to your local university and your economics department. Okay, you guys go do that. That's not what we're here. That's not the flavor of the channel at all. You guys know that. But let's look at the 81x equals 24. $2,400. Okay, and the $2,400 again is what? That is just these levels. And let's look at, let's bring this back over. Okay, those are just the levels here. Make it a little bit complicated. May get a little complicated now. That's just, guys, as I bring this back over to look at it. Okay, the 2,400 is this 1,800 and the 600. The different levels as we've gone down. Look at this. As things have become less expensive, they've entered into a zone which is reasonable in terms of an investment. Just, I mean, in terms of a demand curve, guys, it's become less expensive. So there's, you know, peppered in. I always just we start to pepper it in a little bit. Just pepper in something, all right? And then we kind of double down. Well, now we probably, you know, we want to triple down. It's a heavyweight double down, triple down approach. Okay, it's in line with what a lot of the top, some of the biggest bad guys on the planet who trade, guys, this is what they use. So I'm just communicating that strategy. If you like it, that's fine. If you don't, that's great too. We'd love to hear your strategy. Go ahead and join our Discord and Twitter and let us know what you're doing. I want to see how it's working out. Is it working out like some of the best traders on the world right now? I'd like to know. If it's beating them, I'd really like to know. So as we look at this, it's that 600 and that 1,800, bam, are literally injected, bam, bam, look at that, into this zone right here. This is the immediate price action that we're interested in, right? So we follow these fib levels of investment through here. These two are kind of categorized as being those injectable levels at which we're going to have that amount of funds, as opposed to down here we had 5,400. That was the right amount to have down here to be able to capitalize on this gain of, let's say, ballpark 75%. Okay, we were able to capitalize on that gain of 75% with the majority of our money at the lower level. That's the nature of this, and the beauty of this strategy is you're not investing in it up here where you cannot take advantage of it at the better price and achieve that positive price dynamic. Okay, with the fluctuations in the price, you want that dynamic to be achieved. You want to maximize your gain. So that 600 is getting thrust into here, the 1,800 is getting thrust into here. That's the 2,400 up here. Okay, you guys understand that? You see how that carryover? You see the carryover from the previous aggregate, kind of macro, the larger scale. Yeah, that 2,400 is bam right in here, which is the sum total of the 600. Let's just move this over into here. That's 600 and the 1,800. We've just combined them. There would be a different kind of differential we would get into, a differential equation based upon some different advanced mathematics. I don't want to get into it. Let's get a little bit sensible in terms of how complicated this needs to be for purposes of our generalized discussion. Okay, you're not trying to get a degree. We're trying to go over strategy. So as we look at that, 2,400, okay, and I know 81 times something equals 2,400. We're going to add this up and prove to you guys this makes sense, and you can use this kind of theory on the 81, or you can multiply by 4 every time. Whatever you do, just make sure you have more money at the lower levels. Please don't contact me. That's just a kind request. Don't contact me saying you bought in at too high of a price. Don't buy high to sell low. It's just, don't do that. People get very frustrated because the market will correct. Dogecoin's done that. May it go to $1? I hope, and I believe. I believe like you guys believe. But it's going to go high. It's going to retrace 50% in value. That's the nature of the price, guys. That's the nature of pricing action. That's the phenomenal pricing action which we get to capitalize on. So that's exciting. Let's go through these figures. I've brought it up a few times. Let's go ahead and do it. Pricing targets are first retracement at 26 cents, 26 and 7 tenths. Second, 38.2 on the retracement is 38.2% retracement of the overall value into this zone, which is the 25 and 5 tenths cents. The next level is the 24 and 6 tenths cents at the 50% retracement. The next level, 23 and 7 tenths cents. Okay, and that's the 61% level, guys. That's kind of your golden pocket. This one got down all the way on the candlesticks again to the 78.6. The market maker picked you up. All right, he picked you up for a reason, because you had your some people had their levels laid out very quickly and went ahead and took advantage of this. They weren't asking me, guys. They weren't asking me, should I get involved in this right now? It's not my position to say, well, right now it could go up, it could go down. I mean, what do you want to do? It's just kind of like, is it going to rain 50 days from now? It could not. I mean, it's just, I guess it makes a difference if you're where you're at, et cetera. But maybe that's a bad example. But you understand, I mean, if you prepared for the outcome, the contingent, it's just not going to affect you as much. Let's just say that. You're already going to be prepared for it. It's kind of a late conversation in the middle of a hurricane saying, well, you think it's going to rain. It's like, yeah, it's already raining, brother or sister. We're in the middle of a hurricane, gale force winds, and the rain is stinging my face as you ask me that question. It's like, yes, I think maybe some people already got in. The market maker has already delivered 20% to people who follow this strategy. And I say that in a jest and kind of fun way because we're all learning. This is all part of the game, but you guys understand that. It's like, yeah, the market maker already came down into these levels. I'm explaining to you why and how to lay those levels out in the future, potentially even on this, with the understanding, guys, and this is the best thing about this strategy, with the understanding that you're going to need available cash at the lower levels. You're just going to need, like that 5,400 that's right here. You're going to need that instead of the 1,800 or the 600. You're going to need that double down, triple down approach because, you don't know. We go through the eye of the storm. It's beautiful. We may go through the hurricane. Who knows? Whatever that example is, I kind of like that because, yeah, people got in. The market maker came in and picked up these lower levels. They already made 20%. So it's kind of like, the event has happened, right? And people are like, well, should we get a part of the event? Now that exposure level, I can't tell you guys when to sell. I'm not going to tell you that. I'm not going to give you advice like that. But I'm just going to give you a strategy that's being used by some people here. And, it's not a gambling approach. I'm going to say that it's not like just a strict roulette. Now this is a little bit more calculated. This is a little bit more in line with basic demand principles. The lower the price, the more demand you're going to have, okay? We want to achieve more in terms of your cost basis, okay? We want to achieve more, I'm going to say more efficiency on your pricing action through a lower cost basis, a lower price per coin. This is what exactly this has just done, and I would anticipate we're going to apply this strategy again at each and every interval, guys, and we're prepared for it to go down into the next level. That's our contingent. That's how we have backup cash. That's why if it goes down, it just represents an opportunity to trade for us, guys. If it breaks down through, on this overall Fibonacci, what does that mean? It just means I have more of an opportunity. Okay? It means I have more of an opportunity at a lower level with a larger amount of cash. If it goes down to 5 cents, I'm prepared for that. Me, personally, I'm prepared for that. I have more cash available at 5 cents. Okay, the big guys on the street. I'm not saying I want that to occur at all, but I have that available in the market to apply to the market at all times. Okay, heavy amounts of reserve cash, heavier amounts, like 1x, 2x, 3x, 18x, 54x, like on the aggregate here. Yes, reserve cash, heavy cash on the downside. Okay, so this is nice to play with in here, and you're going to see this is 20. By the example, this is 2,400. This is not an insignificant amount of money. Could be 24,000. Could be $24. Just it's the example. This is the hypothetical kind of that turns into the day traders, the alpha traders quiz for the day. Okay, this is the alpha traders quiz. How do we apply this? Now we've been through this a few times. I haven't wanted to get into it because I may lose some of you guys. All right, but the 81x equals 2,400. So we know that 2,400. Well, all we do is we take this x, we want to isolate the x, and we want to divide 2,400 by 81. Okay, that's all we want to do. Hold on. Let's see, what do we do here? I hit C, escape, there we go. So I want to do the 2,400 divided by 81. All right, 2962 is our figure. 2962. I would be precise down to this exact amount. All right, I'm not going to do that right now. Okay, what I'm going to do right now is say $30. Okay, that's exactly what I'm going to say on here is x equals $30. We want to solve for x. Yes, you're going to have a calculator. You're going to have to do one amount of division, and maybe a few multiplications. That's it. All right, 81x equals $2,400. That's the total amount that's being injected into these levels. Okay, that's the total amount that would have gotten invested in and around here and essentially maximized when you consider the possibility of it going to the upward trajectory. You can't predict this exactly, guys. It's not an exact science. It does involve technicals, but you can't say at an exact time. Now this thing varies. It's like the wind in a tree, guys. It's just, you can say predict kind of the general weather pattern, but you can't exactly say how far the branch is going to move. You just can't say that, guys. So the markets are unpredictable to that degree that they are. We enjoy that. Okay, I'm trying to come up with some nature examples because the Fibonacci's are all rooted in nature. But like the formation of a galaxy, I don't want to get too esoterical, but you guys do your research on Fibonacci, what it is. It's involved in everything you look at. Essentially, it's a growth dynamic, and they definitely involve it in our trading software. So I don't have to get esoterical with it. I'm trying to balance out this math that we're doing. Okay, look, 2,400 x equals 30. You guys got that? Yes, you got that. X equals 30. How do we know that? Because 30 times 81 equals what? See, we're trying to get this deal here. If we have 81 units that we've injected originally, this 1x, 2x, at these different levels, 1x, 2x, 6x, 18x, 54x. What is this? Doubling down and then tripling down. Tripling down from the 2x is 6x. Tripling down from the 6x is 18x. Tripling down from the 18 is to 54. That covers us on an upside trajectory potential. If it decides to take off early, we're still involved somewhat. Okay, but we're gearing ourselves towards only being involved at the lower levels with cash. Okay, with the heavier amounts of cash only being involved. And now these ratios right here are carried in just within this $600 and the $1,800. Okay, we still have the lower levels with more amounts of cash. That still have, on the broader approach, that still have this whole idea imputed into the broader approach, guys. So we've taken that 1x, 2x, 6x, 18x, 54x right here, that 54. The same principle is applied within this. Okay, it's the same dynamic on the micro as on the macro. If you choose to change that, you may, of course. Okay, this is not a strict rule of adherence. This is a concept to be understood and a video to be rewatched. Okay, so in terms of rewatching, to understand a strategy to not over-involve yourself at higher levels, because I get that comment all the time, and I want to help people because I have been through learning this, and sometimes you learn the hard way. Those lessons you'll remember forever. I don't want you to get washed out of the market, guys. I don't want you to get washed out of the market. Looks like let me see what we got. So a little shout out. I appreciate that. Jay Suave, what's up, Jay Suave? You already learned a turn. You've learned a ton. I appreciate that. On Matic, yeah, Matic is phenomenal. I'm glad you made some cash on Matic. Way to go, Jay Suave. Thank you for the confirmation. That's very nice. And yeah, welcome to the crew, guys. Jay Matic is making money on Matic in the house with a little validation. We really appreciate that, Jay Matic. And yeah, Jay, I'll call you Jay Matic right now. You have just become Jay Matic in the process of the Crypto Kingdom. So congratulations, Jay Matic is in the house. Suave Matic, that's very nice. I like that. I appreciate the shout out very much. And yeah, if you guys are making cash, just that is validation that someone's learning. You guys are able to learn, able to apply. This is kind of the next level here in terms of what you're looking at, Jay. So we know, and I'm going to do the math real quickly, okay? So this 81x equals 2400, okay? We're just seeing what increment is multiplied by, what amount of money is multiplied by 81, which is the double down, then the triple down, triple down, triple down. That's just stacking your cash at the lower levels. Even this smaller amount of cash, which doesn't even represent, it's just a fraction of your cash, right? It's just the 1800 and the 600. It's just these two levels, right? It's just these two levels. You know, you still have more money down below, but we're going to use this double and triple down on the micro with the magnifying glass, okay? We're going to use this same approach within here. Again, to stack the idea, instill within you this whole demand, kind of the demand proficiency, okay? We want to have proficiency in terms of our demand, which means we're going to demand a lower price. We're going to create a proficiency in our trading approach, in our strategy approach. Okay, Jay just said essentially he's achieved some degree of a proficiency, so that's very nice. So as we look at this on Matic, and Matic's got some great action. We'll let me get into that, Jay. I appreciate that very much. Very kind of you and very, very important. So let's take this. We know that x equals 30. Why? Because 30 times 81 equals 2430. All right, now it was the decimal. Remember, it was like 20. It was 29 point whatever it was. Okay, so that's perfect, guys, because now we know that $30 times the $81, and I would use those decimals. Okay, I'm gonna round up so you guys understand. I'm just gonna round up right now. Okay, you see how that multiplies back out? That means we're gonna take 81 times 30 equals the 2400. That equals the exact amount of the total here. So we can use these right here. We can use the 1x. Great, we know what that is now. Thank goodness. Right, we know what that 1x is. Now just pay attention, the math will get you. Isn't that awesome? Now we know the 1x is 30. Isn't that great? Now we know the 2x is gonna be 2 times 30. It's gonna be 60. Now we know the 6x is gonna be what? That's gonna be 6 times 30. That's gonna be 180. Let's get the calculator ready, okay? Now we know, okay, that the 30 times 18, oh no, that's 300. 8, 3 is 24, 3, 540. Okay, let's not do this so you guys don't wonder or worry about how intelligent I am just in terms of doing my own math. Let's say 30 times, what is it, 30 times 18. It is 8 o'clock in the morning, right? 540, okay, I'm not going to do this to impress you guys, okay? You guys can do your math on your own time, so can I. So 54 times 30, I don't want to seem too calculatively brilliant. Okay, there we go. Yep, 1620. Okay, 1,620. All right. Now this is just nice, guys. You're going to see how this works. This is the 2,400. Now look at what we've achieved. All right, these would technically be orders that would be carried over into that level that achieve, kind of maximize. And guys, it's just a strategy. It's one strategy of many, right? But I like this because you're able to achieve, okay, you're able to achieve this full amount of investment. It's calculated down with this double down, triple down, heavyweight approach. Why? It's heavyweight because it's heavyweight on the bottom towards the maximum amount. And you guys, the guys who get this, you're going to understand this, guys. It's maximized towards that largest amount of money. The market maker picked up that 1620 at that lower price at the 22.4. You see that? He picked that up at the 22.4. That's the lowest in here, aside from this. This 61, he didn't get to that. It would have been a further down approach there. But of the 1, 2, this 1, 2, 3, 4, and 5 area, looks like that 6 didn't get hit. So we're 1, 2, 3, 4, and 5 area. It didn't get into that next level, which would be essentially that. Just essentially that next level, which we haven't necessarily discussed. I don't want to get into that right now. This is as discussed, as detailed as we've gotten thus far. Enjoy that. As we get further into it, we've been talking on kind of the aggregate here for a while, guys. We've been talking on the aggregate. We may start to deal with some of the complications, and things may slightly be refined. I'm going to say that as we get into the approach, they may slightly be refined, but I want you guys to understand that's how this money gets plugged into there, okay, under the strategy. That's how, if we were to strategically create this dynamic to where things can get, to where we can take advantage of kind of market theory and strategy, like what are we supposed to do? I mean, we're supposed to line something out, I'd say in line with what we can garner from the best investors around, guys. That's just, I mean, that's what I'm going to do. I don't know if you guys are into doing that, but that's kind of who I want to emulate in my own investing approach. So that's what we've done here. Now, you guys already know the answer. You can rewatch this video and you can say, and now you may have different than 81x. You may go 4x every time, okay? You may do differently. You may go 1.5. I would do the calculations on the entirety and go through some examples that make you kind of convinced that, yeah, this gives me enough exposure early enough on the upside. And guys, it's only $30 on the top. Yeah, it is. That's just the bottom line. It's just $30. It's just an order for, it's just peppering in a little bit of a light amount of money on the top level. You say, well, that's not even really realistic. Well, what just happened? You know, I've been going over this for weeks on end, guys. You know, I've been going over this for weeks on end. What happened? You just got picked up. The entirety of your money just got picked up. So in terms of, well, that's just not reasonable. It could go up. You want to have some exposure. Maybe you put it at 30, just pepper in a little bit at 30. The odds are it's not going to go up directly from there. Okay, it's just not. Different market conditions, different charts, different periods within the Elliott wave, etc. I won't get into wave theory at all, but at different times you may adjust these differently. Right now, this is kind of a basic, kind of American approach. Good old made in the USA, as far as I know. And actually, that's a joke. I don't think it's an American investor that invented this. So I don't know. It's kind of interesting. Let's talk about how you would apply this, guys. This is the same exact amount of diligence that you're going to want to try on a strategic level that you're going to want to apply here. All right. Now you see this differently, right? Now you completely see this differently, okay? And now you know you're in some different levels, okay? So some different levels from the side to the left, okay? You can make adjustments, of course you can. You trade it the way you want to. In terms of the actual entry spots, etc., they're just on, guys. And when they're on like this, I know I'm on the right time frame. I hope you guys are too. But I know literally down to the nook and cranny, I'm on the right time frame, like 100%, because that candle's going all the way down and getting picked up. These orders right here are getting exactly picked up. Wham, right? So that's how your $2,400 would be allocated within this range, okay? And that's nice, huh? That's just nice. The top level, you guys see that, right? You understand that? That's just, I hope you guys appreciate that. That's nice, and it's going to look something like this in terms of the actual mathematics. I'm just going to do this so you understand which mathematics are involved at what levels. And let's see this and to that 18 and this to that 54. You can screenshot that. You can kind of review it. It's a little bit, it's a little bit involved, but you guys are involved in the market, so you must have liked math at some point, not just news and hype, etc. This is little bit more advanced. And again, we can create kind of differential equations around this with just risking and leverage depending upon whether or not we're in the bull or bear kind of syndrome. If we're in a bear syndrome, I like to call that. We're in a bull run and a bear syndrome. I don't know what's wrong with these guys. They don't want to make money. But you also see how we prepare for the retracements. We prepare for this price action on the downside. We favor that, okay? The approach favors a retracement in a long here, okay? That's what we want. When something goes up, fantastic, okay? When it went up, when it achieved this 50 to 80%, wherever you cashed out at, great. Now, your cash, you may have had something literally planned up, and I would hope you do, to where at this level right here, you're ready to break away, kids. You are gonna break away because you've got another trade literally ready to launch. All right, you're breaking away in this zone. You're breaking away. You just made 80%, and now it's time to go throw this into another golden pocket or into another trade that's going to yield you an immediate, let's say, 50-60% over the next number of hours. You want to talk about day trading? What is day trading? That's day trading, guys. You know this level. It's predetermined. We get it on a timing basis. You get into this. You make 50 to 80%. Bam. Okay, let's say you make 50%. You're happy with 50. You cash out. You got another trajectory waiting. That's a lot, guys. It's not easy. That's why, just study hard and be conservative and don't play too hard. If you play too hard at this, you can get washed out, guys. I don't want to see that. You guys know that. So do your own, risk evaluations and talk with an investment advisor. I've got friends of mine who are investment advisors. That's not the purpose of this channel at all. I do sessions in Discord. I try and train up alpha traders, guys, because I learned about this stuff in high school. There's literal self-training manuals you can go through, etc. I carried around the big books in high school. Number one in my class, this and that. Okay, brilliant guy, whatever. Just like you, everyone I've talked to, guys, in this group is brilliant. It's just you're very dynamically charged in terms of your intelligence. So we do have some alpha traders here. We have some technical traders behind that. It's some sessions I engage in. That's not the purpose of this channel. But if I can help spread the knowledge that I've been able to achieve over the years, absolutely, I'm going to do that without a doubt. That's just part of kind of my mission in life. I have to admit that because I want people to have a positive experience. You'll see here prior hedge fund expertise. Yeah, we can get into the details of that. Professional financial analyst. Yeah, worked on some big deals. Duke University, etc., with some major companies, corporations, heavy hitting, big wallet kind of guys with billion-dollar deals. So that's been fun. And former U.S. presidential advisor. That's just the truth. So hats off to everybody who is involved in politics and still happy. I would like everyone just to be happy, whatever side you're on, please be happy. Life's too great and we have too much fun. But that's why we also enjoy crypto, because it's non-political. It's just that we get to have a good time. So what a great space that we can all get together and be like, yeah, let's jam on this. This is something we all enjoy. So this is the strategy. Now, you know how. You don't have to ask whatsoever, well, how does this get applied here? You don't have to ask at all. And what's the contingent? Well, we have to say that'll all work unless you run out of money. Are you listening? Do you know what just got injected over here? The 600 and the 1800? Yeah. Into these zones right here? Yeah. Okay. You guys see this now? Let's go back to the line chart just to kind of make this a little bit more reasonable. But yeah, this is some complicated stuff, guys. This is some complicated stuff. This is kind of the nano. This is the magnifying glass on the macro. These are pulled into as injectable levels. Okay. So this was 2400. Now you're going to notice, guys, as you get higher up into the equation, you're going to be dealing with less money. Really? So this represented a real kind of huge opportunity here, being in the golden pocket, huh? Yeah. This represented a big opportunity. And you were closer to your heavy amount of reserve cash. Yeah. And below this is probably a little extra reserve cash. Yeah. So this is what keeps you in the market. This is what keeps you trading. Like, well, I only made, let's say on 5,400, you only made 50% on 5,400. Oh, really? Well, I'm sorry, or 8, whatever the amount was. Like, I guess you have to make more than that every 5 or 10 minutes. I mean, every 5 or 10 hours, guys. You're doing well right now. The trick is to stay with a strategy that's going to serve you well in the long run. Okay, you need to be able to capitalize on this in the long run. You need to be able to do that. Okay. So that's going to require just some discipline on your side. It's going to require you guys understanding. I'll float some charts out there. If I float out a chart, guys, that looks like this, okay, and the line looks like this, just in the future, so that you know. If it looks like that, let's do a bright. Let's do a red. I like that, a red. Okay. If a line gets out there like this on a pattern, and I'm defining something that looks like that, and looks like this, all right, and looks like this. That's kind of like a warning zone, huh? It's just a warning zone. The opportunity essentially had already passed, so we got into that a little bit. And I don't want to talk after. We never want to talk after the fact, after you've missed an opportunity to re-engage at different levels. Okay, we just don't want to discuss that. And if you're not prepared on the lower level with a kind of an acquisition at a heavier amount of cash, that's when you start to panic. That's when you start to say, I don't want to lose my money. So just give it the opportunity. If it's a 50-50 shot, it's going to go up, it's going to go down, right? You gauge when you want to get in, when you want to get out. This strategy, okay, has worked out over the preceding intervals here, and it's something that I think you guys can continue to look at. It's continued to serve you well. The people on this channel, I've talked with people who are doing phenomenally well, okay? Alpha traders that are doing phenomenally well. So just understand that. And the only guide stick that you have, the measuring stick that you have, is your own contentment with the process. And I'll continue to leave this here for a second. You guys can kind of take a screenshot here if you just tuned in. It would be nice to have a thumb up, kind of a like on this from all of you. We would really appreciate it. It would mean a lot for the channel, just to get the algorithm going and let people know kind of one strategy in terms of trading. Okay, so it's not easy. This was not an easy kind of lesson or a session to go through. This is kind of the level of sophistication that we do try and go through in terms of kind of alpha trading. So this is also a primer to what, I kind of anticipate the guys in alpha and the girls in alpha, what they'll go through, the technical traders, what they'll experience. So this is kind of a send off, a bon voyage. You guys have a good day. This is your departure from the docks. Have a great day, bon voyage, and have a good journey. And you're going to have a good journey, I believe, if you employ this strategy consistently in line with the overall investment levels as they're going to apply within injecting these amounts of cash into these different levels. You're going to notice, well, what happens at the top level? We don't have much exposure. Just remember, if you have $1 million down here, this essentially with this theory, it's like, well, we only have an exposure of like 1%, man. That's not enough. 81x equals 2,400. Right? If we're saying that it's about 1% of your overall cash position in this different level, it could be on the aggregate 1% of $1 million is $10,000. I think that's kind of reasonable. I would say that for me personally, I'd say, yeah, that sounds real reasonable. If someone's doing that, they'd probably be around for a while. I'd say, yeah, they probably know how to trade. They probably know what they're doing. That's just my own opinion, okay? None of this is investment advice. I'm glad that it's not. I think maybe you could invest with someone, maybe a broker, and you could probably discuss things like this with them. It's kind of that level of sophistication. It's just an indicia of my degrees and whatever work I've done at Harvard Business School, etc. So you guys enjoy this. This is the Crypto Kingdom. Again, please give us a shout out, give us a thumbs up, a like on the video if you would like more videos like this. If you appreciate the content and the kind of the calculations we went through, the overall strategy. This is the heavyweight double down, triple down approach. Okay, it works on anything, guys. It's just a framework to keep you in line with that demand curve, which is at expensive levels, real expensive. There's no demand. As we get into the more reasonable pricing, we pepper in a little bit of money. Okay, then we're going to double down. We're going to double down, and essentially we're going to triple down. We're going to start that double down, triple down approach. Heavyweight means cash at the bottom. All right, we want our reserve tucked in, ready to execute it at the lower prices. We want to achieve more pricing efficiency, which means a lower cost basis, a lower cost per coin or share. All right, so that's where we're at in terms of being involved here. I hope you guys are kind of doing the legwork on your own, and we just appreciate you being a part of the kingdom. Let's one more time to Twitter, TheKingdom in your search box. You're gonna have to scroll all the way to the bottom. We're not one of these featured little members. We don't solicit like that. That's not our deal. Click on Go to the Kingdom on the bottom in that search box. Then click on Follow, click on Notifications, and we'll be able to hook you up to our Discord. Also, make sure you follow us on Discord. A lot of the charts, a lot of these sessions, this is the type of information that people are learning. So I hope you appreciated the opportunity to learn it. This is London, and I just appreciate you guys being a part of the Crypto Kingdom. Make sure you're detailed in this, and if you need additional investment advice, go find an advisor. Unfortunately, I don't think in crypto many advisors are able to deal with this space right now. So just guard yourself and make sure you're doing your own analytics, and maybe talk to your parents for advice. advice or one of your friends for advice if they're involved in the market. And if you're here for just opinions and kind of an education, that's our purpose here, is to educate on different theories and strategies of technical analysis applied to the overall crypto market. That's it for now. You guys have a great day. We'll be back with something exciting soon. And in the meantime, you guys know how to attack this little sucker right in here as it wants to play around, and you get some exposure. Looks like you're already into level 2. Doesn't it? Yeah, it looks like you're already into a level 2. You guys already know the amounts of cash that you're going to inject over into this new pricing structure. So now we've had a very productive day. So I hope already you guys are having a good day. You're doing a good job at work. Also, stay healthy with your work, and also the other relationships. The only thing I'll say, the other relationships that you have in life that you thought were very worth your investing in before you got involved in the market, make sure you continue to invest in those relationships, guys. It's crucial because a lot of people get caught up in the market